This is Robert Kraft, and I am your host on SNN.Network. And joining me today is a familiar face, a good friend of the show, Joe Boskovich, who is partner at Old West Investment Management. Joe, welcome back, man. How you holding up?
Great. I'm doing well. Thanks for having me again.
It's great to have you back on. And how are we doing in quarantine? Are we back at home, at the office?
I'm at home right now, but I have been in the office because it's basically just me. So I'm quarantining in different locations.
Nice. There we go. So the reason I invited you back on today is that I really wanted to discuss one topic that I know, from talking to you offline, that is something of a focus to you, and that's really looking at the entertainment industry, looking at different publicly traded entertainment companies. You know, with us, everybody being in self-isolation mode under quarantine, there's a lot more streaming, there's a lot more content being consumed. So I'd like to get your first take on the entertainment industry, what you're seeing right now from just from your perspective. What are you seeing right now?
Yeah. So I started looking at the entertainment media space a couple of years ago, and it was really more so than having an opinion on the media space. It really stemmed from our process, which we've talked about in the past, and that would be, identifying owner managers that own a lot of their stock and have been buying stock, and good capital allocators with track records of success. So kind of the most obvious one in the entertainment space would be someone like a John Malone. But watching these actions and again with several names, I kept on finding interesting ideas in the media space. So that really is what initiated, I guess you could say, my deeper dive into the media space, and that rather than having a preset opinion, but the content space is exploding, right? And you know the war for content is heating up, and if I told you 3 4 years ago that you would no longer have cable television, um, you would laugh and you'd say, "There's no way, that's impossible," and that's what's happened. And Netflix was kind of first on the scene. They started streaming in 2007, and if you recall the story, I think Reed Hastings approached Blockbuster and basically pitched them to buy 50% of the company, and they would essentially be Blockbuster streaming service. And they were turned down. I think Blockbuster and a lot of the legacy companies viewed the kind of the digital media space as something that wasn't real, and it was. And so, like I said, Netflix was, they kind of had the first mover advantage. Then probably in 2013 they started producing their own content, and then you had Hulu was next on the scene, and then Amazon
Mhm.
Studios came next, and then last year you had the launch of Apple TV and Disney Plus and CBS All Access, and now in the next upcoming months you're going to have the launch of AT&T's HBO Max and Comcast Peacock. So the space is, it's crazy. You have an intense amount of competition, and that's just for the streaming video on demand space. Then you have the advertising video on demand space, which was kind of pioneered by YouTube in 2006 when Google bought YouTube for, I think it was $1.5 billion, and everybody thought Google was crazy at that time, and it's turned out to be Google's smartest acquisition. And I think the last quarter on the conference call, it was either 10 or 15% of Google's total revenue comes from YouTube, which
Wow.
is that's mind-boggling. Um, so you have this explosion of advertising video on demand, streaming video on demand, and as this competition heats up, um, how do they differentiate themselves from one another? And I think what we're finding is really the only way they're going to differentiate themselves from one another is access to good content and exclusive content. And that's easier said than done, but we try to position ourselves in a few names where we think these are kind of these land banks for attractive intellectual property that will eventually be purchased by some of these larger streaming services.
Right, because that's really where we're at now. I mean, it's interesting. I was just finishing. I just all week and was reading Bob Iger's autobiography, and
Yeah.
he was talking about his content acquisitions, and he knew early on that in order to grow the Disney brand, that he needed to bring on, he couldn't just go after acquisitions or content providers that fit that wholesome Disney image. Like that would ultimately kill the company. He needed to get things that were family adjacent or could somehow fit the mold, and that with the Marvel acquisition, obviously with Star Wars acquisition, so
Pixar.
yeah,
Yeah,
Pixar, of course.
Marvel, and Lucasfilm. I mean, that's just, I mean, it's like one, two, three. Incredible,
I
incredible.
mean, just the forethought, and especially
Yeah,
Marvel at the time too, because they had all these different characters that were sold off to different studios. I mean, Spider-Man was still with Sony at the time,
yeah,
but
yeah.
my main point in saying that right now is, it seems, at least from your perspective, I have to ask. I mean, are there that much, of these older legacy, I guess I'd call it, gold mines of content available still for some of these streaming platforms to buy, or is this, are they now just in the process of supporting all the new talent to bring in as much new content as possible?
Yeah, well, so I mean, well, so there are still, a fair amount of companies that have great IP. I guess what price do you pay for that IP? And
Yeah.
you have, CBS Paramount obviously has a large catalog, and they've tried to create their own streaming service in CBS All Access, which
Mm-hmm.
has been successful. But do they do that on their own, or do they get acquired by someone else? Lionsgate's a company that we've owned for a long time, and we've lost an incredible amount of money in it, and it's been a horrible investment so far. But they have a large library of IP. Um, Lionsgate, so it's probably about 3 years ago. I don't know if you recall this, but Hasbro uh, made a run at Lionsgate, and the rumor was that they were wanting to buy Lionsgate for $40 a share. Um, Lionsgate turned it down, feeling that it undervalued the company, and here it is today, trading at $6 or $7. So that was a giant missed opportunity. But um, then there's yeah, I mean, there's not many, and obviously, I think Disney will be one of the more successful streaming services because they do have that content library. And for a long time, I thought that Netflix was actually in big trouble. You go back a year ago, there were a lot of very smart people short Netflix, and we actually had a small short position in Netflix. And I think the reasoning there was, if you look at the big streaming services or those that are making a run at streaming, um, all of these other companies could just spend and spend and spend, and it didn't matter if they made money because they were making tons of money elsewhere, right? So Apple TV, they make money selling iPhones and
Yeah.
iPads. Um, they could spend all this money with Apple TV, and they didn't need to make money there because they were making money in other pieces of the business. And Amazon with home shipping, and Amazon Web Services, and then God, what am I?
Disney with the
Netflix.
parks
Yeah,
and the movies,
Disney,
yeah.
right? The parks, and so I thought Netflix was probably in a world of hurt. I think to all of our amazement, Netflix kind of sat there and they said we could create our own IP, and look how successful they've been in the last year. I mean, if you just look at movies, The Irishman, and The Two Popes, and they've created some great franchises. They really haven't done that yet on the television side. I'm still of the belief that you are going to see some big M&A in the space, and that's one of the reasons that we own some of the companies that we do. And whether it's a Lionsgate or a CBS, I do think you see Netflix start acquiring companies. Surprised it hasn't happened yet, but you have seen large, acquisition for talent. It's just not the
Yeah.
companies, that we own or that you could own. I mean, you've seen hundreds of millions of dollars, thrown around for hiring production talent, right? You had Shonda Rhimes, and then uh, I forget the initials. It's like E.B. Weiss, and he was
Mm-hmm.
the creator of Game of Thrones, and he signed a $100 million deal with Netflix. Um, and then you see where AT&T, HBO Max, which launched just in a couple months, they paid 425 million for the exclusive streaming rights to
Friends,
Friends,
yep.
which left Netflix. And then The Office is leaving Netflix, and Comcast Peacock, I think, paid 500 million for the exclusive streaming rights to The Office. So you see incredible amounts of money being, thrown around for valuable content and good libraries. So, from an investment perspective, how can you position yourself for that, the continued, uh, I guess, fight for content. And there aren't a lot of great kind of independent libraries out there, and we think we've identified a few of them. So
All right.
we'll see.
I was going to say, let's get into that a little bit. I mean, I don't normally ask, names that you're into, but I mean, it sounds like these are companies that we've talked offline that I believe you own that, are looking to kind of position themselves in the content creation game and be available to all these streaming services to provide the content to them.
Yeah. So it's interesting. So where we've positioned ourselves is we own two small, I guess, microcap companies. One is called Wild Brain, and the other is called IDW Media. And think, those are both situations where they have great content and they will be bought. We have smaller positions in Lionsgate and Discovery, and both have been bad investments, and I guess what we've learned is what's a valuable IP, what can be what new IP can be created, and not all IP is created alike. And if you think about, so take Game of Thrones for example. Okay, so people binge watch Game of Thrones, um, but Game of Thrones isn't, it's not like Miracle on 34th Street where people watch it every year during Christmas time, right? So it's not just that you have a great library of IP, but what libraries, what IP can you build franchises around? And so that's really where I think the real value is it's in great franchises. And you look at what Disney has done, and I mean, you just mentioned you read Bob Iger's book, and in that book he talks a lot about how he really started getting away from a lot of new theatrical releases. And if you look over the year, Disney has released fewer and fewer kind of single, they've introduced fewer and fewer new concepts. And instead, it's all about building franchises around existing IP. Um, so that's really, where we've spent a lot of our time. And, what companies are there can we identify that have strong competitive moats or brands? And like I said, in the media space, it would be evergreen IP. And that is of paramount importance. And do you have evergreen IP, and do you have franchise brands? And I'm going to read this from a presentation I put together. But so our largest position currently in the media space is a company called Wild Brain, and a lot of people will not recognize that name, but they will recognize DHX Media because it's traded under that name for years and years and years. And the company was kind of mismanaged and didn't have the right management in. And when we really started taking a look and really building up our position was when they had a change of management about a year ago. And we've talked about this in the past, and all value investors talk about this, but it's not enough just to identify things that are cheap, because as we know, cheap stocks are cheap for a reason and they'll stay cheap. So, can you identify a catalyst for unlocking that value? And oftentimes I do think a catalyst for unlocking value is new management coming in and shaking up. And about a year ago, or I get it's now been a year and a half ago. DHX Media, and they renamed the company to WildBrain, but they brought in a man by the name of Eric Ellenbogen to be their new CEO. And Eric Ellenbogen, he was the CEO at Marvel prior to the company being sold to Disney, and then he started a company called Classic Media that was one of the top kind of family franchise companies. He sold Classic Media to DreamWorks, and then at DreamWorks he was the head of television and animation. And then he obviously sold DreamWorks to NBC Universal, went to NBC Universal, ran a division at NBC Universal, and then was recently hired away at WildBrain. But so I wrote this in this presentation, but so with dozens of media platforms. So first off, WildBrain is in the children's content space, and I really, I'm like I said, think back to what I said earlier about Miracle on 34th Street and how people watch that movie over and over and over again, and that's not necessarily the case with live action, but it is the case with animation, right? You always have a new generation of kids consuming the same content. And so how do you identify if a company has a strong brand or a competitive moat? And, so here I write, with dozens of media platforms for kids and families to choose from, original content based on franchise evergreen brands is paramount. And so this is kind of the case study I use, but so if you take most of Pixar's movies, we were talking about Disney earlier. So most of Pixar's movies have been hits, but on a pure theatrical release basis, not all are financially successful. And, typically a studio like Disney or any studio, they would retain half of the box office haul where the theater owners get the rest. And that model may be going away too, right? And then, the marketing budgets are huge. So the actual content production profit is oftentimes low. So I took the Cars franchise as an example. It's one of the most successful franchises of all time. It is estimated that Cars 1 made $120 million profit for Disney, and Cars 2 lost money. However, from the sale of lunchboxes, stuffed animals, video games, bed sheets, etc., the Cars franchise has generated global retail sales approaching $20 billion for the company. So hugely profitable for the company, but like I said, not on a theatrical basis. It's been off building a franchise. So do these have franchise brands? What can you do with those franchises? So in the case of WildBrain, not that they have a Cars, but what franchise brand do they have? And in their case, they own the Peanuts franchise, Snoopy, Charlie Brown. And, I know it seems as if maybe that franchise is losing relevance where, people in their 50s and 60s would maybe read the comic book strips, but there hasn't been a lot of new content. So I do think the Peanuts franchise was at risk of maybe losing relevance at some point in the future. But that's where it gets to all these streaming services fighting over good IP. What can you have? So it was really game changing for WildBrain. About 6 months ago, they announced a deal with Apple TV, where Apple TV has an exclusive agreement to produce new Peanuts content, and they just released the first bit at launch, Snoopy in Space, which was a joint project with NASA, and it's Snoopy in Space has won all sorts of awards, and it's one of the top trending television shows. But once again, it's all about building a franchise, right? Is it a franchise where you can, hit the customer again and again and again versus, throwing out some television show or movie that people are going to watch once, and then it's just kind of locked in that vault, and it's not going to be relevant again.
Right. So then I also have to ask then, in this time of quarantine, we were talking a little bit offline about this, and, yeah, okay, we're in the first month or so of our quarantine. We don't know how much longer this is going to go on. There's a lot of people who are on unemployment, that have streaming accounts, watching, consuming as much content as possible. So right now, I think we can all agree that the streaming services are seeing a huge uptick in usage and probably new subscribers for those who just don't have certain accounts. Um, but let's talk now some of the negative effects that also means. This means that there is a halt in production of new stuff. I know I'm a big Marvel fan. Like every movie that I want
Yeah.
to see in the next 6 months is all got pushed back now. For a few months.
Yeah.
You know,
Yeah. Well, and once again, like you said, how long does this go on? So, even when you think of, movie crews and actors and,
yeah.
I mean, how close are they going to want to be to, to other people and social distancing? And so I mean, we'll see it. Obviously the movie industry, the television industry will come back, but like you said, who knows how long this lasts?
I mean, it's kind of a scary thought, but I guess my main point in asking all of this, I mean, as an investor, when we're analyzing the space, and yeah, there's so much uncertainty literally in every single industry that we're looking at, not just in entertainment, but entertainment seems to, there's a bit more tangibleness, I guess you could say, because it's something that we all, know and love and are continuing to consume content. So just from an investor side of things, how should we think about what's going on currently, and then also looking forward?
Yeah. Well, so it's interesting. I think that this coronavirus, I mean, if I had to guess, I don't know that I think more so than changing things, I think it just speeds things up, right?
Hmm.
It's like I mean, you have people in their 70s that have never ordered a package off of Amazon, right? Because it's just that it's not their generation. They go to the store, and I mean, now you have people in 70s, and for the first time, they're ordering off Amazon. You same thing, right? I mean, you people in their 70s and 80s that they would just, you know, cable subscription, but maybe this speeds up kind of that fight for valuable content that could be exclusive to streaming services. So now you no longer, in the future can get it off, traditional linear television. So I think it speeds, this process up. Um, so we'll see. I mean, like you said, I most movie studios or all movie studios have kind of been halted. They're not necessarily producing new IP. So I think maybe that does. I mean, if this were to continue for a long time, I think it probably does increase the value of existing land banks. But once again, is it content that people can kind of reuse, and can it be recycled over and over again? And in the case of Wild Brain, that's one of the interesting things about children's content is children's content is usually um, engaged
Over.
with. Yeah, it's engaged with over and over and
Yeah.
over again. And yes, you have new televisions, but people are watching season one of um, you know some Netflix cartoon, and they'll be watching season one for the next 20 years.
Yep. Absolutely. So with that, Joe, where can my audience go and find everything they need to know about Old West Investment Management and also to follow you on Twitter?
Yeah, so our website's Old West IM as in investmentmanagement.com, and my Twitter feed is Boskovich 64. So B as in boy, OSKO, V like Victor, IC 64.
Joe, thank you so much for joining me today. Stay safe and hope to see you soon.
Great. Thanks, Robert.
Thank you.
Talk soon.